Ka pai. Well, tēnā tātou katoa. Thank you all very much for coming today to participate in the final of our Constant Change seminar series for 2020. My name is Alexandra Keeble. I'm part of the engagement team of the Deep South Challenge, Changing with Our Climate. I'd also like to introduce Angela Halliday and Waverley Jones, who's participating as an attendee, who are our partnerships directors in the engagement team. And to round out the general picture of doom and gloom and pandemic and climate emergency, I'm very pleased to be welcoming Belinda Storey today to talk through her groundbreaking research into the likely timing and extent of insurance retreat at our coastlines here in Aotearoa. As well as her research for the Deep South Challenge, Belinda is the Managing Director of the Whakahura Project, which is a research project looking into the emergence of extreme weather here in New Zealand due to climate change. And Belinda's also the Managing Director of Climate Sigma, which provides scenario analysis and asset valuations about the physical risks of climate change. Before we begin, it's worth noting that Belinda's research emerged from one of our Deep South dialogues into insurance that we held in 2017. That dialogue brought together researchers and sector representatives to map research gaps and to develop research questions that would be stakeholder relevant. So it's exciting to see the fruition of that dialogue in the final project that was commissioned out of that process. We have a packed Zoom room today. We had about 350 registrations, and that was at quite short notice, which I think speaks to the level of interest in the community regarding this issue. Our registrants have come from all walks of life, from local government, from central government, from the insurance and finance sector, from all kinds of community groups, and from iwi and marae groups around the motu as well. So I think there's no shortage of interest in this issue for climate adaptation. And at some point, I guess, we need to be able to translate this interest into actual decision making on the ground. So before I do a little bit of housekeeping, I want to draw your attention to the first in a series of info sheets that we in the challenge have been developing. This first info sheet, which is available on our website, I'll pop the link in our chat again now, is addressed directly to homeowners. So it's translating Belinda's research into language that homeowners can understand, into questions that homeowners ask of their insurance companies and of us in the challenge, to take that next step of making sure that our research is accessible and relevant for users of the research. Just a little bit of housekeeping. So today Belinda's going to speak for around 40 minutes, and then we'll have about 15 minutes for questions. It's really important that we don't use the chat function for questions. If you ask your question in the chat panel, I'm very likely to miss it because it just scrolls through very quickly. So please ask your question in the Q&A panel. If you notice that someone else has asked a question in the chat panel, can you please support me to direct them to ask the question in the Q&A panel as well? Things move very quickly. I will monitor the Q&A panel and try and group like questions with like. We're really excited to hear from a diverse range of perspectives and to perhaps hear some new questions today as well. So please don't be shy. If you have a question, no matter where it's coming from, please do ask that question. As always, we'll be making a video of this seminar available on our YouTube channel by Friday at the latest. Please sign up to our newsletter so that you don't miss out on this video and also on future seminars and future research releases. So without further ado, I will hand over to Belinda and ask Belinda to not forget to share her screen. Kia ora rawatu.
Thanks, Alex. So what I'll do is share my screen. I'll just do that now. There we go. So I just wanted to let everyone know that while I'm speaking today, that does not reflect the amount of work that was involved. Sally Owen, Ilan Noy and Christian Zammit were absolutely critical parts of the team in bringing this research to fruition. So I just wanted to initially acknowledge that. And when I talk about insurance retreat, someone asked me the question, and it's one of those things as scientists, you start to get so used to the term yourself, you forget that it may be new to others. And the simplest way I would describe insurance retreat is that it's when the cost of insuring a particular hazard gets so great that your insurer would rather stop insuring you than charge you a break-even premium on that hazard. And so because the sea level rise initially and other features of climate change are changing the probability of those hazards, we are expecting to see insurance retreat. And I'm going to be talking about where and when we would see that. So I'll start by giving an example of a location. So this was a storm in Sydney a few years ago. I'm sure you can look at those houses that have lost 50 metres of shorefront overnight. Wasn't a particularly big storm, it just came from a different direction, and imagine that they've probably lost insurance. But the question that we were wanting to look at is what point do those houses that are behind the rock armoury, at what point do the houses behind the road might find that they find insurance more and more difficult to obtain? So we looked at what the insurance retreat thresholds would be, and it's not information that an insurer would ever tell you. That's considered to be part of their confidential information and competitive information. But what we can do is undertake some fairly simplified actuarial analysis to see what the size of premiums would be, and then also see if there's evidence internationally. And so what we find is that we would expect to see partial retreat, so where some of the risk that you had previously transferred to the insurer is no longer able to be transferred to the insurer. So that's an example would be in very high excesses. So partial retreat would expect to see once the annual exceedance probability got to about 2%. So that's equivalent to a event that happens on average about 1 in 50 years. By the time you get to a 1 in 20 year average probability, so a 4.88% AEP, you are very unlikely to still have insurance. But what we found was interesting is that when we looked internationally, we found that in the UK, the private insurers became very reluctant to insure flood risk at only 1.33 AEP. So when an event got moved from a 1 in 100 year event to a 1 in 75 year event, private insurers in the UK started to withdraw from flood risk. When you're thinking about how climate change is affecting the probability of hazards, it's helpful to think about how the distribution is shifting. So what I've got here is a normal standard. The hazards that we are looking at don't follow a normal standard, but it's the distribution that people are most familiar with. So it's something that we use to help describe this concept. When you look at the confidence of the science in terms of being able to demonstrate when these curves are shifting, scientists have the most confidence about temperature. They're fairly confident about sea level rise if we exclude any ice sheet collapse. Precipitation gets more difficult to predict how this is shifting, and storm surge is even more difficult. So for the purposes of our analysis, we only looked at sea level rise, and we only looked at sea level rise that was happening in the next 20 years. So if you look at this, you'll see on the bottom right-hand corner in the black triangle. So this is what an insurer might insure. So an insurer isn't going to insure a regular event, they're going to insure a rare event. So this is an example where the insurer is a 2% AEP. And on the bottom axis, you have the standard deviations. So with climate change, the distributions of these are shifting, and the new distribution, because the mean of the new distribution occurred about once in 6 years in the old distribution, it will feel familiar. But what happens is that there's a very dramatic change in the extreme. So when you get, say, a 1 sigma shift in the distribution, you have a change in the probability of what was previously rare events, and they can become 5 times more common. Now, under climate, what that means is that as the curves shift, we can expect that insurers will shift with that curve. They're going to have a threshold of what they're willing to insure, and as that curve shifts, they will shift with it. They're not going to support 5 times the probability of an event on an event they previously insured. Now, climate change is also changing the shape of the distribution, but today we're just going to talk about a shift to the right, and we're just going to talk about sea level rise, not extra storminess. So looking at sea level rise projections, the interesting thing is that if you look out 20 years, there's very little difference between the representative concentration pathways. There's very little difference in the terms of the sea level rise that we're going to get from a 2.6 representative concentration pathway versus an 8.5 RCP. So the emission decisions that we make today aren't actually going to have a big impact on the sea level we're going to experience in the next couple of decades, because the sea level rise that we're experiencing today was baked in by emissions in the 80s and 90s and before. So what that means is that when we were undertaking this analysis, we did different comparisons of the scenarios, but there wasn't a lot of variation. The numbers that you'll see here in my presentation will be for 4.5, but we did test them on the others, and it only made a difference of a couple of years. The data sources that we used, so we looked for riskscape information, we used School of Surveying elevation data, we used LINS information for tide gauge and coastline data, and we had Statistics New Zealand for regional boundaries, and then we had the 1% AEP extreme level extent shape files from NIWA. So this is the map of those locations that currently experience coastal inundation with a probability of 1% each year. The summary statistics of the houses that we found within those zones, we limited ourselves to only houses within those zones, which is which was a conservative approach. Wherever there was an assumption to be made, we took the most conservative assumption. So these numbers should be considered to be a baseline. They're not the total number of houses that are likely to be affected. You'll see that there's more houses in Wellington and Christchurch and Dunedin than there is in Auckland. That's just the nature of the particular flood maps that were available to us in those locations. You'll see that there's different years of construction. So Auckland and Christchurch had waves of construction in the 1970s, but in Dunedin, of those houses that are in this 1% AEP location, half of them were built before 1925. A key factor in determining what the damage that water can cause is the floor type that you have. And so we wanted to have an understanding of whether the floor within a home was wood or concrete. And so you'll see that in Christchurch, a lot of houses have concrete floors, whereas in Dunedin, most houses are wood. So the closer you get to one, the more houses that are wood. There's high consistency in terms of the median floor height across the different locations. The fact that Christchurch is lower will be in part because concrete homes tend to be built lower. The replacement costs, they are inflation adjusted, but we accept that they're probably undercooked in the sense that they don't have building inflation costs. It's just a CPI inflation adjusted. So these are only houses that are within 1 kilometre of the coastline and are within that 1% AEP maps. But we note that there's about 450,000 houses in New Zealand are within 1 kilometre of the coast. What we did is that we then looked at the storm tide information for each of these ports. And we looked at these ports because these were the locations that had sufficiently long record of storm tides for us to be able to undertake generalized extreme event analysis of them. So what we did, extreme value, apologies. So what you see here on the left-hand side of the axis, you'll see it intersects at the 1% AEP. So what we did is we said, of those houses that are currently within a 1% AEP, how much does that change with just a small amount of sea level rise? You'll notice that the curve in Auckland is flatter than the curve in Wellington, and that's primarily because of the tidal range. So the tidal range in Wellington is narrower than Auckland, and I'm going to explain a little bit of detail next about exactly why the tidal range has such an impact on the change in the probability. But one thing you'll find interesting is that it doesn't take very much sea level rise. It's just centimeters for houses that are currently within that 1% AEP location to have a significant shift in the risk. So in Wellington, for example, with 6 centimeters of sea level rise, you're seeing the probability of those hazards doubling. So it goes from 1% to 2%. And that's in part because while we have high variability in terms of the rain we have in New Zealand, and you can almost tell a foreigner by whether they've taken a jacket with them when they're going outside on a walk, we have low variability when it comes to our storm surges. So in part, what that's meant is that we've tended to hug our coasts very tightly because we haven't had a long history, certainly since European settlement, that has recognised that there is this storm surges can be a hazard in these locations. So if I look at how the tidal range impacts whether a storm surge causes damage, I've got a couple of examples here. And so one of those is an example with a wide tidal range. So this would be more like Auckland or Nelson. And I've just split it into quarters so we can use this as an example. So if you think about a tidal range that's got a 4-meter tidal range, if a storm surge comes in at low tide, it doesn't really matter because it's just absorbed within the existing tidal range. But if a storm surge comes at, say, 3/4 tide or at high tide, then that storm surge is able to overtop the existing high water marks. But if you've got a tidal range of half the size, say a 2-meter tidal range, and so locations that have a tidal range of less than 2 meters would be, for example, Wellington or Napier. Then again, if you have a 1-meter storm surge come in at low tide, it's okay, it gets absorbed within the tidal range. But if it comes anywhere from mid-tide upwards, then it's able to overtop. So what that means is, if you've got a 2-meter tidal range and your storm surge size is 1 meter, then half the time you're going to experience overtopping. Whereas if you've got a 4-meter tidal range, then you're only going to get overtopping 1/4 of the time. So that's why you have a steeper curve in Wellington and Auckland. That means that insurance retreat is going to happen sooner in Wellington than it will in Auckland. When we looked at the damage function, we looked at a water height. We took so we looked at water height and the water height above the floorboards. So in order to do that, we needed to have the ground elevation and the floor height for each property. And we undertook that analysis and compared that to the water height that you would see with a 1% event. And then we added the most conservative level of a wave setup, which was 50 centimetres. We undertook this analysis on every home and within these flood zones. In order to do that, we needed to use distributing computing technology. So we used Rapoi, which is at the Wellington University, and that was work that Sally Owen led. We looked at the premium estimation. So in order to do that, once we had an idea of the damage that would be expected to see given a certain amount of water height per home, we then multiplied that damage by the replacement cost for that property. And then we applied a 30% loading, which was a fairly standard loading that you see with insurers in terms of admin costs and profit margins. We used a threshold level for damage function on the basis that a simplified model, the change in the probability of the hazard was so great, it was going to dominate any sort of analysis we did here. So we took a fairly simplified approach in terms of the premium estimation, and we used a threshold. So if it was more than 1 meter above the floorboards, then we saw a 50% damage function. If it was less than 1 meter above the floorboards, then we differentiated between wood and concrete. What that told us is that what you see here are the modelled premiums that we would expect to see for this single hazard. So you'll see in Auckland, those locations that are currently within the 1% AEP zone should expect to be seeing $2,000 premiums per year for that hazard alone. That's not for the entire cost of their insurance for a fire or burglar or accidental damage, but that's just for coastal inundation. The fact that we expect that we're probably not seeing this at the moment is that there is likely to be strong cost subsidization at the moment between houses that are in the most hazardous locations and houses that are in the least hazardous locations. We then look to see how much of a sea level rise it would take in order to reach the 5% AEP. So you'll see in Wellington it takes 12 centimetres and in Auckland it takes 15. And then on that basis, how much you would expect the insurance premiums to go up to, given that you've got that amount of sea level rise. Now, that's without a retreat. We don't actually believe that insurers are likely to continue to provide that insurance at that premium, because again, what we find is that insurers would rather not offer you insurance than be in a situation where someone talks about the fact that their insurance for a single hazard, for example, is costing them $200 a week. So if we combine these, the curves of the AEP with these thresholds, so partial retreat, we talked earlier about, so this is around when an insurer starts to transfer some of the risk back to the policyholder, and this is often in the terms of high excesses. So you might have a $10,000 excess for flood insurance. There might be some policy exclusions and other measures that constrain the amount of coverage you actually get for that particular hazard. But we anticipate that by the time your probability of your hazard has got to 5%, we don't believe insurance would be provided at all. Now, in New Zealand, we have this practice of bundled insurance. We have all perils insurance. So what that means is when you get insurance, you're insured for everything that potentially could address your house, unless there's a nationwide exclusion. And an example might be terrorism or the like. So because of that, what that means is that if one hazard goes up significantly, there's a real risk that the entire insurance package becomes unaffordable. And at the moment, that bundled insurance has served us well, because we do live on shaky isles. There are so many places in New Zealand that have some form of hazard. That sharing of the risk has allowed us to maintain very high levels of insurance, which has helped protect us when we have had major natural disasters. But we anticipate that as climate change is putting pressure on single or more than one hazard and the premiums for those, insurers will stop insuring, or we may end up with an unbundling. So it may be that insurers stop insuring particular hazards, even if that is the hazard that you are most likely to face. So bringing these things together in terms of that timing of sea level rise with these expectations of retreat, what you'll see is Wellington and Christchurch should start to experience partial retreat within a decade. Wellington finishes retreat a little earlier than Christchurch, just because it's got that steeper curve. Auckland starts a bit later and finishes later, but by 2050, we anticipate that every house within these locations are unable to have their insurance policies renewed. The example you see in front of you is the 4.5, but we tested it for the more conservative emissions profile, 2.6 and 8.5, and there was very little difference. It was maybe a couple of years in terms of timing. And again, that's because the sea level rise that we are experiencing now was baked in with emission decisions years ago. One thing, we only undertook the analysis within the 4 major ports, and that was because we wanted to undertake analysis that was standardized across a national basis, and had a methodology that could be potentially picked up by any location, even if they didn't have LiDAR. And one thing that we found was interesting is that because the tidal range was such an important determinant of the timing of this, we realized that if we simply did a ranking of the locations around New Zealand, you would be able to compare your tidal range to a city with the tidal range closest to you, and that'll give you an indication of when you might experience insurance retreat if you are within a 1% AEP location. You'll notice that Dunedin and Littleton or Christchurch a slightly reversed order, and that's just the particular nuances of that location. But generally, the tidal range is your single biggest determinant of when you're likely to experience insurance retreat if you're in that 1% AEP zone. A few exclusions and limitations. So we only included properties within 1 kilometre of the coast, and that was because if you're talking to someone about insurance retreat and it's impacting and that they're losing insurance, but they're further back from 1 kilometre from the coast, they may not even be aware that they're exposed, that the flooding that they're experiencing is primarily caused by the coast. So we put that limit on it. We excluded properties that had a replacement cost that were below the 1st percentile and above the 99th percentile, so that we avoided sheds or properties that were mislabeled in the data set. And we didn't do analysis on terms of insurance deductibles. The flood maps were only available for selected urban areas, and we just wanted to highlight that the riskscape data itself is based on a statistical model, so we are constrained by the data that is available. And when we looked at each property, we needed to have a point for that property. We didn't have the building footprint. So there could be some situations where part of a building is flooded, but if the centre of that building wasn't, then it wouldn't be picked up by the point, but it's very small numbers would be involved. We took the most conservative wave height of 50 centimetres, and we weren't able to extract out from the flood maps the benefits of hard and soft defences because they're embedded within those shapefarms. We also did an analysis of what would a major event look like in terms of a direct hit on New Zealand. And we initially, we wanted to take an example of what if we were to have a repeat of the Wahine storm. So this was the extratropical cyclone that hit in 1968, which has a AEP of greater than 1 in a 500 year, an ARI of 1 in 500, so 0.2% AEP. We initially were going to look at Auckland, but we found that because of that smaller tidal range and the particular exposure of the coastline, that Tauranga was a better match in order to undertake this analysis. So what you have here is an example, a screenshot of when extratropical cyclone Cook was coming in and directly came through Tauranga. And what we did is we found that we wanted to understand, would a size of the event be big enough to trigger the reinsurance excess that the government has? So that's 1.5 billion. It turns out that it wouldn't be as able to trigger that excess, but we did find a really interesting observation about where we are developing. So to give you an example, since 1968, there's been about 10 centimetres of sea level rise. And we looked at houses that were within that 1 in 500 flood zone, or the 0.2% AEP. And what we found is that 3/4 of the houses within that hazardous location have been built since the Wahine storm. So the Wahine storm was the biggest inundation event that happened in Tauranga, which was a water height of 2.88 metres. And yet we are continuing to build in the locations that are most exposed to these types of storm surges. Interestingly, even within those 3/4 of the houses that were built since 1968, a third of those were built in the 2% AEP, so the 1 in 50 year flood zone. So we are continuing to build at low locations, even when we've experienced a natural disaster. To give you an example, we then looked a little bit further along the Bay of Plenty, and what you have on the x-axis is the height of the Wahine storm. So 200, and what we saw is that the number of houses that have been built since the Wahine storm is significant. So we're not choosing to stay out of harm's way. If we were avoiding building out of harm's way, then we would expect that that bottom left-hand corner of this graph would empty out on the houses that are built post 1968. But what you'll see is that since 1968, we are intensifying our development at the lowest locations, even within short distances from our coasts. One response I'm question I'm asked is when I talk about insurance retreat is they say, well, how can we put in defences to hold back the sea? And so this is an example of one of the most expensive defences, which is the Thames Barrier, which helps defend the City of London from storm surges from the North Sea. It was put in response to a tragedy that happened in 1953, where there was a significant number of lives lost in southeast England and in the Netherlands. We often look to the Netherlands to get advice or guidance about how we might respond to sea level rise. But I wanted to highlight a key number to keep in mind. So I want you to pause for a moment and just in your mind, imagine how big you think the Netherlands is relative to New Zealand. So just get a picture in your mind for that. So the Netherlands is about the same size as Southland, and yet even Southland has twice the coastline of the Netherlands. So New Zealand has about 11 times the coastline of the Netherlands, and that's their original coastline before they had significant defences built in the 20th century. I then wanted to do a very simple calculation that said, well, how much resources does the Netherlands have in order to be able to defend their coastline? And so if you think about every dollar that New Zealand has per kilometre of coastline, the Netherlands has 47 times the GDP. So it's a really significant difference in terms of the resources that they have available. And what that means is if when we think about the approaches that we might take, it may mean that we need to make decisions about the more difficult decisions sooner than you might see in the Netherlands, because we're not going to have the resources to go through all of the different options that might be technically available. I also have, sometimes people say, well, can I make my house more waterproof? Can I change my house if I'm not putting defences that are perhaps funded by the public? And this is a photo I took. I visited friends in Greenwich in Connecticut a few years ago. And I heard that they'd experienced quite a lot of flooding, and then a number of the houses had been lifted. So what you'll see is an example of one of the houses I saw when I was there. And you'll see that the entire house has been lifted up. Now, that costs about $200,000 US. That's going to be, which might be okay if you've got $1 million house, but that's a pretty limited option available for most properties. And the other thing I wanted to point out here is the stairs. When you get to a situation where you're lifting houses like that, you start to make your communities less accessible for people. So people who might have a disability or people who are older aren't going to be able to live in these homes because just because they're too high. So some of the key issues that we're expecting to come out of some of this research, we're obviously looking at insurance at the coast, but we know that for every house that is exposed to inundation from the coast, there's about 10 houses that are exposed to flooding inland. So we expect that there will be a key challenge with insurance in our floodplains. That's research that is coming up in the second tranche of Deep South. There will be more demands for hard and soft defences. And there's also perhaps a public misunderstanding about coverage exclusion. So there may be some policies where you are not covered for the coastal hazard. But if you're 900 metres back from the coast and your house is flooded because there's rainfall that can't get out because of a storm surge, you may not be aware that you are potentially excluded currently from what might be your greatest hazard. Emerging issues we would expect to see is underinsurance and people perhaps not having insurance. That's something we haven't had in New Zealand. We've had very high levels of insurance of our home and contents. We should also expect to see insurance retreat from infrastructure. So if a local government builds a seawall or pumps, then as those hazards increase in probability, then the local government's going to have more and more difficulty getting insurance for those assets. And as I mentioned, this unbundling of all perils is also going to be an issue. Upcoming research. So I mentioned that there is a research program, a larger program that's being led by Patrick Walsh, which is part of the second tranche of the Deep South. I have a small part to play in that. Sally Owen, who was in our team, is also going to be a very key researcher within that project. And that's primarily going to be looking at flooding more inland. As Alex mentioned, I'm involved with the extreme events and the emergence of climate change. which is able to provide us some of the early science in terms of how these extremes are changing, so how that storminess is changing. And there's also going to be significantly improved flood maps, which will be provided by another research program that's just come out of, just been funded by the Endeavour program led by Sam Dean. So those were my, that's what I wanted to talk about today, and I'm very keen to hear your questions.
Belinda, would you be able to unshare? Thank you. Wonderful. So thank you for your presentation. You've actually finished well within time, so we've got lots of time to explore our participants' questions today. Interestingly, we're also taking questions on Twitter, which is a new one for us. So I've tried to note where they've come in the process, but I think we'll just get started. So the first question we have is from Terry Moore, which is a larger question, I think, but it's been raised in the media today again, and I think everyone will be interested in your perspective, Belinda, on alternative funding mechanisms to support managed retreat. So Terry has raised the paper by Jonathan Boston and Judy Lawrence, but I know you have also raised other alternatives. Would you like to just give your perspective on that potential future for New Zealand?
So I think that any approach that we have in terms of funding must, at its core, seek to reduce the risk in the long term. And so anything that any decisions that we can make today that reduces the risk accumulating further, I think is the core tenet of any funding mechanism. So I'm familiar with Jonathan Boston's work on that. And I also have an alternative, which is a model called climate leases, which indicates that you have coastal property, but any location facing escalating hazards effectively has a time limit on it. And should we be recognizing that time limit and establishing changes in legal property rights on that basis? So I think that this is a conversation we need to be having nationally about how we're going to respond to this. We absolutely need to be making decisions at the utmost that help people get out of harm's way when there is risk to life, and particularly populations that may find it difficult to evacuate when there's any sort of severe weather coming. But in terms of how we fund that, I think there's a number of different options, and I welcome that debate.
Thank you, Belinda. You kind of hinted towards some of the territory that might be covered in the next question, which is from Scott Willis, who is part of the Blueskin Climate Resilience Trust in South Dunedin. They're doing great work building resilience in local communities there. And he has a question which is about how this research, I guess, can inform our response to support people who are living in poverty and with energy hardship, with the challenges, including mental health challenges that come with floods and erosion and all of the climate hazards we face. And he mentions that current privacy laws make it difficult to identify those individuals and those communities, which also makes me wonder about the issue of transparency in insurance information. So he's asking, what changes can we make to enable greater assistance for those who are most at risk and currently in difficulty, the hard to get to?
So one thing we do know is that when someone loses insurance, they don't want to tell anybody. So they don't want to tell their bank, they don't want to tell any prospective buyers, because they're very concerned what the impact that might have. But what it means is if you've lost insurance, you're going to be much more vulnerable when an event occurs. So I think we need to take more responsibility from a central government perspective to make sure that information is provided. The market isn't able to give that information. Some people say that insurance can provide a signalling in terms of the change in risk, but what I would argue is if you're in a property and you've lost insurance, then that signal is too little and it's too late. In terms of providing support to communities, there is going to be situations where we're going to need to think about how we get people to move out of harm's way. And so I welcome the review of the RMA and the fact that we need to be thinking about managed retreat. The full extent of support that we provide in those communities isn't something that I have a deep expertise in, but I'm very conscious that we need to make sure that any responses we have don't exacerbate those inequities.
Thank you, Belinda. And I'd also just like to draw participants' attention to some other research that was also commissioned out of the insurance dialogue by Lisa Ellis, looking into ethics and maladaptation under our current legislative framework for climate adaptation. Well worth a look. I'll put that in the chat panel as well. The next question, where has it gone, is, oh, sorry, I've lost it, is a question from Tom Fitzgerald about the fact that in Australia, according to Tom, actions from the sea, in quotes, are largely excluded from insurance policies, and that the houses that were in that slide received coverage as the insurance companies could see a marketing incentive because there were billboards flashing saying NRMA doesn't pay. He is asking whether the same sorts of thresholds exist here for insurance retreat, considering that our large insurers are Australian.
So we don't know. We have had anecdotal advice that there is an exclusion in policies, but we would need to, two things would need to happen. We'd need to have access to policies to be able to undertake that analysis, or we would have had to have had a major event that occurred in a storm from a storm from the coast, and we then knew the number of people who weren't insured. But there is some ambiguity about that, and that is something that there may be individuals whose policies exclude them from storm surge, but they're not aware of that, and but they're paying their premiums every year, and they're not aware that they potentially are excluded from coverage for their greatest hazard.
Okay, and this is a point where we had a question from Wolfgang Blau on Twitter, who's a climate journalist in the US, who says that the Florida equivalent is the likely end of the 30-year mortgage due to rising sea levels. Do you have any perspective on that possibility?
So there is a key difference between New Zealand mortgages and mortgages in the States. And mortgages in the States tend to be for 30 years and they tend to be fixed for 30 years. Whereas in New Zealand, the term might be 20 to 30 years, but you can't get a fixed mortgage in New Zealand for less than 5. So for more than 5. So what that means is while you may have a term in place, you need to go back to your bank at least every 5 years and renegotiate what the rate you will be paying on that. So it's likely that people in New Zealand will experience a shift in the pricing of that risk, and certainly are more likely to be asked by their bank, do they have insurance, because we have that shorter period of fixed term mortgages in New Zealand.
Okay, we have a question from Sophie Marsh. In some respects, I think you've covered this, but when we released the report this morning, we had lots of responses from Twitter saying, my neighbour has lost their insurance, or a friend who lives on the South Coast has lost insurance, or my insurance has tripled in the last 5 years, etc., etc. So the question is, have you seen evidence of insurance retreat already as a result of coastal flood risk? And my question would be, how do we aggregate the anecdotal evidence that we're seeing?
So and this is something that I absolutely disagree with on the insurance industry, but I strongly advocate that insurers should be required to notify their regulator. They don't need to notify insurers, but researchers, but they need to notify their regulator whenever they decline to renew a policy on the basis of a change in hazard. This is something that is required in some jurisdictions in the States. That information, they are required to notify their regulator. What that would allow us to do is understand the scale of the problem. We're able to do analysis externally as researchers, but policymakers who are trying to respond to these issues don't have the information. So that's something that Alan Noy and I have included in our submission to the review of insurance law, that we believe that insurers should be required to notify their regulator when they withdraw, so policymakers can make informed decisions.
Okay, and this is a question from James Hughes, which he asked before you made it to the part of your presentation on floor types. but I think it's worth raising because also our impacts and implications program leader, Anita Reeford, raises a similar point. James asks whether wooden floors are more or less vulnerable, or what your assumption is there. And Anita points to the fact that there are other ways to make homes flood resilient apart from lifting them. I guess the question is how much of this information is in discussion or in play with the insurance sector.
So there is the opportunity they talk about waterproofing your house. So there are ways that if the water does get to your front door, there's a way that you can keep that water out. It will depend. So we looked at just water height. We didn't look at water strength, speed or duration. So water tightness of a house can be useful when you're thinking about the depth of the water, but if you've got any real speed, then the very foundations of your house may be stressed. So there is some work on that, but you also need to think about what is if you're having a situation where your house is flooded, then you get into a situation, what is your ability to move about? What is your ability to go to school, to go to work? There's going to be other factors. So while you may have a immediate reduction in terms of your insurance costs, there are going to be ongoing costs of that disruption. And the other thing I would keep in mind is that any sort of adaptation that you make to your property is going to be needing to take into account how much that risk is changing. So we're talking about just the first 10 centimetres of sea level rise and what that does. So if you're in a location that is continuing to be exposed, even if you make your house watertight, you're going to need to make your house stronger and stronger as those inundation events become faster, deeper and longer. So have I answered that question? Oh, so the floor, the wood and concrete. So we used the damage functions that were provided by NIWA, which says that wooden floors tend to get more damaged. So they are more likely to have about a 30% damage function than concrete floors. But if you've got that water there for a significant period of time, and if it's going up your walls, then you're more likely to get the damage functions tend to converge.
Thanks, Belinda. We have a question from Sunny Whitelaw, who's with the Braided Rivers Trust in Te Waiponamu. Is there any indication that insurance in New Zealand is looking to decline insuring new builds or replacement builds, such as happened following the Christchurch and Kaikoura quakes?
So we don't, again, having information on what is available is really difficult. And the other point is, you need to have insurance for your mortgage, and you might have it when you get the mortgage. But the thing to bear in mind is that insurance is reviewed every 12 months. So even if you have insurance on your house when it's new, you might not have it 5 years later, or you might not have it 15 years later.
Great. And a question from Chris Cameron. He asks, how localised do you think insurance will be or will become? Will there really be differences between, and I imagine within, New Zealand towns and streets? Or will the European reinsurers simply say the risk in New Zealand is too high?
So there is a real advantage for reinsurers of having the diversification of having New Zealand. So in terms of our earthquake risk, because it's not correlated to any other location, there is real benefit for reinsurers to include New Zealand in its portfolio. How reinsurers are likely to respond to climatic events is yet to be assessed. At this stage, we're not looking at triggering reinsurance in New Zealand for floods, which is that piece of work that we did at Tauranga. But over time, there may be situations where reinsurers pull out. It's less likely to be because of something that happened in New Zealand, but more because they say they might have a blanket policy that says we're not going to insure houses that are 1 metre above sea level anywhere. So they're more likely to respond to major events that happen elsewhere, and they seek to simplify their exposure.
Okay, we've still got 10 minutes to go, and we've still got some questions to answer, but please do keep asking questions if they come to you. A question from Matthew Smith. The value of insurance premiums seems consistent. Does this not have anything sorry, I hadn't read this question in advance. Anything to do with the value of the property? Are you expecting property values within at-risk areas to decrease proportionately as risk increases?
So that's some of the work that I do in a separate piece of research, was understanding just how overvalued property is in the most hazardous locations. And we anticipate that there are a number of factors that will start to impact property prices. One of them is the availability of insurance. Once you lose insurance, the availability of getting a mortgage and the price that you will have to pay to be able to borrow money, if you can borrow at all. So you might have to pay a higher interest rate. You might need to have a higher loan to value ratio, or you might have to, lower loan to valuation, or you might need to have the insurance that is provided by the bank. And so those things will start to impact the price of the capital that you're able to borrow. There's also going to be features that'll impact the property's value, which is about this infrastructure. So do you have access? Is the local government still going to maintain services to your property? Once some of those services start to be turned off, then you can expect to see property prices fall. The thing that I would caution though is that people anticipate that as soon as this news comes out, then property prices might collapse. What we find is they don't. They're really sticky. Even when there's a disaster and a property is destroyed and rebuilt, we find, but continues to be in a highly hazardous location, property prices bounce back within 3 to 7 years. And that's really consistent across the international literature, across all sorts of hazards. We're really good at ignoring risk when we're tempted by the proximity to a good school, or the view that we have, or the fact that it's the best place that we can be warm and safe and dry.
Kia ora, Belinda. I think that is indicative of as well of the very complex nature of the problem that we're facing. A question from Ruth Wallace. Do you have maps? What is the situation, I guess, with our mapping, particularly with the 1% risk level that you've taken into account in your analysis?
So I am asked, well, where are the maps in the report? And that was a very deliberate decision to not include maps. What I would recommend is that people talk to their local council and get an understanding of what is the best map that the local council has that provides information on the 1% probability of a coastal inundation. And that's your best place to start, is go to your local council and see what maps they have. Because there can be quite mixed quality on those. They are being updated over time, and I would much rather people have that conversation with their local government than I put out a map, for example, that's based on very conservative estimates, and someone who's just outside it feels safe when maybe it's just that the map hasn't extended as far as it could.
Thank you, Belinda. And just also to point our audience's attention to the modelling work that's also underway in the challenge in our Earth System Modelling Program, and in our in other related projects in the impacts and implications space. This question flows on from what we've just been talking about from Sandra Villard. What is stopping Regional Council using this information in their zoning, regional plans and future buildings? How is the risk information being made publicly available?
So one of the other pieces of advice I would have, and I think it's something that we could do quickly, is that I think central government should require local government to provide this information. By all means, establish a standard of how uncertainty is assessed and communicated. But I think that is something that central government should require of local government. Local government actually want to have that requirement, because at the moment, local government are currently, in some cases, reluctant to provide that information because they're concerned of being sued by developers or property owners. This is information around risk. It is information that should be made available publicly. It's not just the risk. Even if you were to say that this is a risk that I'm willing to absorb, we live in a community, we live in a society where we rely on each other in times of difficulty. We rely on people to be able to come to our aid if there's an evacuation. We need to have accurate information about risk, and that should be shared publicly.
I'm going to skip to a question just to share the mic a little. A question from Ben Fountain, who asks, have you detected any desire from the big players, government councils and especially insurers, for a collaborative approach on how to explore retreat options?
I caution against any suggestion that the insurers themselves or insurance is a solution to manage retreat. It may be if there is a major event. If a major event occurs, then that's an important point to make a decision. But when the risk is changing and then before an event has happened, I don't think that insurance is something that is going to able to respond, because insurers have an obligation to their in order to remain solvent as a business, that they charge premiums that are the same as or more than the expected losses that they experience. So I don't think that insurers are going to be part of the solution. They certainly are very well informed, and they have a better understanding in the private sector than almost any other industry. I think that they can play a role in helping to support perhaps the finance industry, particularly banks, about understanding climate risk. In terms of the other players, I think it's a really important role that central government needs to have with local government. At the moment, this is very much being left to local government, and it's not something that a small local government on the west coast of New Zealand is going to be able to respond on their own. And there's two things. There's one, people talk about the funding, but it's also expertise. Local governments, in many cases, don't have the expertise in order to be able to undertake these sorts of analyses. And so I think that there needs to be that support from central government for them to be able to do that.
Okay, we've got 3 minutes, so we'll try and rush through another couple of questions. A question from James Hughes again. Do you think it's fair to say the insurance companies might choose to stay in the market and offset across their portfolio for other reasons, including reputational, broader business reasons, etc.?
It's possible, but if there's a competitive environment and they're not required to disclose, then it's simply easier for them to renew your policy. They won't tell you why. Unless there's a legislative requirement for them to do so, they won't tell you why they're not renewing your policy. So it's always going to be in their self-interest to slowly pull back from those properties that are most hazardous. There may continue to be some cross-subsidisation, but when those hazards get so great, the probability of those get so great, it's really hard for them to be able to justify that cross-subsidisation. The other piece is that as there is more requirements in terms of them reporting their risk, it's going to be more difficult for them to disguise situations where they are effectively providing cover to locations that aren't paying the premium that would match the risk itself.
Thank you, Belinda. Okay, so we will ask one final question, which is, I think, an excellent place to take us into the future. There are many questions we haven't had time to answer, and I'm really sorry for that. It may be that we might find a way to answer them and send out an email in the coming weeks, although I do know that Belinda is completely hammered at the moment. But it's been really wonderful to have all of you here and be so engaged, and to keep pushing the conversation forward, which is what we need to do. But for our final question today, to what extent, Belinda, do you see the proposed Climate Adaptation and Managed Retreat Act providing solutions for these issues? And I just wanted to insert here that one piece of work we also have recently announced is Catherine Ions' work into council liabilities for sea level rise and managed retreat. And she is currently doing some work looking at the Randerson report and the proposed legislation, and to the extent to which it responds to findings from our research program and other research, of course, over the last few years. So that work will be coming out relatively soon from the challenge. Please make sure that you sign up to our newsletter to stay up to date. But I'll hand over to Belinda to answer that final question.
So I was surprised that was a recommendation in the RMA review, that they create this Managed Retreat Act, but very pleased to see it. I think that we do need it. We have a patchwork of laws that potentially impact in locations, and currently do not make it provide barriers for us to be able to undertake those decisions to get people out of harm's way. So I'm really pleased that that is going to happen. I'm a little bit concerned that it might be rushed through. Managed retreat is a wicked problem. It's something that coasts all around the world are struggling with, and we're going to face that inland flooding and the like. So the only area of caution I have is that the speed of the reforms that we undertake, the extent of the public conversation that we need to have, so that we have a level of agreement about how we're going to make these really tough calls about moving people from homes that they're understandably very attached to.
Oh, thank you so much, Belinda, for making yourself available today and for presenting such a clear and clear-sighted analysis for us. Thank you, everyone, for joining us, and please, we look forward to seeing you in 2021, which is hopefully a less calamitous year for the world. Okay, ka kite, everybody.
Bye.